You've finally bought your home, your proudest punch, and then a massive cyclone hits, followed by flooding. This isn't a hypothetical scenario. It's something that actually happened when Tropical Cyclone Alfred hit the coast of Queensland and New South Wales in early 2025. Alfred slammed into the southeast coast of Queensland and northern New South Wales, causing widespread flooding and damage. In its wake, tens of thousands of insurance claims have been lodged. There have been more than 34,000 claims related to Cyclone Alfred at last count. The Australian Prime Minister even stepped in, urging insurers to do the right thing and pay claims speedily and effectively as part of their social license. So why is there all this concern from the top? Because history shows a bit of a troubling pattern. After major disasters, insurance companies often lowball claims or drag their feet, leaving home buyers frustrated and financially exposed. Now I know what you might be thinking. You might be saying, Jayden, how is this going to affect me? I'm looking at buying my first home, maybe an investment property, but honestly, it hits close to home. Your house isn't just four walls and a roof. It's likely your biggest asset, it's your shelter, and a place where your future hopes lie. You pay insurance premiums for peace of mind, expecting that if disaster strikes, the insurer will help you rebuild and recover. But what happens if this safety net has holes in it? In this video, I'm going to dive into how insurers have historically underpaid or delayed payouts after disasters, what it means for regular Aussies, and how you can protect yourself. I'm going to take you through a couple of real stories unfolding after Cyclone Alfred and connect it to past floods, cyclones, and bushfires. By the end of this video, you're going to understand why insurance claims can become a second disaster for home buyers, and more importantly, you're going to learn the steps to take so you're not left high and dry. Before we jump into the video, if you get any value from this, hit that thumbs up, it means stacks to me. And if you want more content like this, smash the subscribe button. Thanks so much. Background on insurance and natural disasters. Australia is no stranger to wild weather. From cyclones up north to bushfires down south, flash flooding in between, we've seen Mother Nature at its worst. In fact, since the devastating Black Summer bushfires of 2019-2020, there have been 11 declared insurance catastrophes in Australia. Extreme weather is becoming more frequent, and with it comes a stack of insurance claims. Just to grasp the scale, the early 2022 Eastern Australian floods became the country's most expensive insurance disaster ever, with over $6.4 billion worth of damage and more than 245,000 claims lodged. Insurers were just swamped with claims after these floods. Now, Cyclone Alfred is testing the system again in 2025. So how is insurance supposed to work in these situations? In theory, it's simple. You pay your insurance premiums each year, the insurance promises to cover damage from events like cyclones, storms, fires, and then when the disaster strikes, they pay you out so you can rebuild. The insurance industry even has protocols for big disasters. After Cyclone Alfred, the Insurance Council of Australia declared an insurance catastrophe, which meant it's supposed to fast-track help. Insurers prioritize customers, send extra assessors, and coordinate with government agencies. The goal of this is to get claims sorted quickly so people can start putting their lives back together. Unfortunately, this doesn't always work out. When thousands of claims pour in at once, insurance companies face huge costs and logistical nightmares. Some insurers handle this really well, but historically many have fallen short. We've seen reported patterns of underpayment, denial, and delay going back decades. After the 2011 Brisbane floods, for example, many flood survivors found their claims outright rejected or endlessly delayed. Insurers pointed to fine print, saying technically the flooding wasn't covered by certain policies. As a result, families that had water up to their roofs got nothing. Media reports at the time revealed that 6 weeks after the floods, only about 10% or $2 billion in claims had been paid. Insurers were accused of dragging their feet to bolster their bottom line. It even came out that by stalling $1.8 billion in payouts, insurers were collectively earning an estimated $300,000 in interest every day they hadn't paid the money. It's pretty bad. That 2011 disaster also exposed the notorious flood versus storm loophole. Many policies back then covered water damage from storms, but not from rivers breaking their banks. Insurers seized on this, arguing that the inundation was riverine flooded that was excluded rather than stormwater flooding that was covered. One insurer, NRMA, informed hundreds of Brisbane customers that their claims were denied because an expert hydrology report deemed the event sunny day flooding rather than storm damage. Could you imagine being told that a once-in-a-lifetime flood that completely wrecked your house was essentially not a flood your insurance would pay for? It just defies logic. It's crazy. Public outrage from cases like these eventually pushed the industry to adopt a standard definition of flood, so that kind of hair splitting would be less likely in the future. But the fact that it did happen shows how insurers may use technicalities to limit payouts. And it's unfortunately not just floods. After cyclones and bushfires, we've seen similar issues. In the aftermath of Cyclone Debbie in 2017, complaints surfaced of insurers being overly stingy and combative. One North Queensland homeowner, Mel Deacon, fought her insurer Quay for 18 months over a Cyclone Debbie claim. She said, "My home was destroyed by the insurance process, not by the cyclone." Quay initially paid her $161,000, despite her home policy being insured for $270,000, and evidence that repairs would cost about that much. They even closed her claim after that low payout. It took a decision from the federal ombudsman and a wave of media attention, the story ran on 7:30 and ABC, for the insurer to finally revert. Only then did UAE agree to pay the full $270,000 to demolish and rebuild her home. The company even came out on record and said that the claim had taken an unexpectedly long time to resolve and issued an apology. But for Mel, the damage was already done. She said that the whole saga left her so disillusioned that she planned to sell the property and not really buy again for a long time. These examples underscore a reality. In big disasters, insurance companies have an incentive to minimize what they pay out. They're dealing with potentially hundreds of millions, even billions of claims at once, and they answer to shareholders and the bottom line. That doesn't really make it right, but again, explains why time and time again, after cyclones, floods, fires, many homeowners feel shortchanged by their insurers. It's a bit of a David and Goliath situation. One homeowner versus a giant insurance company with teams of lawyers, assessors, and engineers. The playing field isn't super level, especially if you're a first-time homeowner, not versed in the fine print of insurance policies. Now, it's important to note that not every insurer or claim ends in conflict. Plenty of people do pay what they're owed without any hassle, but enough do encounter problems that it's a serious concern. In 2023, after all those disasters, insurance company complaints hit an all-time high. The Australian Financial Complaints Authority, AFCA, the body that handles disputes, saw a 50% jump in complaints against insurers, the most it ever seen. They attributed the spike to all the natural disaster claims that went wrong. So if you feel nervous about whether your insurer will come through where it counts, well, you're not alone. And it looks like there's a good reason for that concern. After Cyclone Alfred and all the flooding that's happened, we've already heard rumblings of these issues, which is why this topic matters. Communities in Queensland and New South Wales are starting the long recovery, and insurance will play a huge role in that. Will those thousands of claims get handled fairly, or will we see a repeat of past mistakes? Let's examine how insurance companies lowball claims, what tactics they use, and how it affects people like us. By understanding their playbook, you're going to be better prepared to navigate the claims process and fight for your rights if you need it. What does lowballing an insurance claim actually look like? It's when an insurer tries to pay you less than what you might fairly deserve for your loss. This can range from subtle underassessments to outright claim denials using technical loopholes. Let's break down some common tactics insurers have used after natural disasters to shave down their claim payouts. Number one, the fine print gotcha, redefining the cause of the damage. One way insurers lowball is by saying the cause of your loss isn't covered, even if it looks obvious. We saw this in the 2011 floods with the whole flood versus storm debacle. For instance, the insurer might argue that the water damage to your home wasn't due to the cyclone's heavy rain, which is covered, but due to rising river water, which under some policies might not be covered if you opt out of flood cover. It seems absurd, but it does happen. After floods over the last couple of years, a lot of policies do include flood, but you can bet insurers will be closely examine what kind of water caused that damage. If there's some ambiguity, they could exploit it. The classic example was NRMA's sunny day flooding excuse for 2011, where hundreds of claims were initially rejected because a report claimed the water inundation wasn't from the storm, but from river flooding. It's a reminder to check if your policy covers all likely scenarios: storm runoff, river flood, water-driven rain, because if not, an insurer might pull out the fine print to decline the payment. Wear and tear, or blame the homeowner. Another tactic is where insurers point to a pre-existing issue or maintenance lapse as a reason to pay less. This is the "your home was already a bit broken before disaster" argument. For example, let's say a cyclone rips off part of your roof and water pours in, ruining your ceiling. The insurer's assessor might note the roof was rusty or had some loose screws, and then argue that the lack of upkeep contributed to the damage. So they could then refuse to pay the full cover. Many homeowners from recent disasters have heard things like, "Sorry, we won't pay your old roof because it was old," or "the cracks in your wall weren't cyclone damage, they're settlement from before." Consumer advocates reported that after the 2022 floods, some claims were knocked back for flimsy reasons, like alleged insufficient maintenance of the property. Essentially, the insurer is saying it's your fault, not the disasters, which can be infuriating because it just feels crazy unfair. If a homeowner truly neglected their property, the policy might not even cover the resulting damage, but insurers can lean heavily on this clause to avoid paying. It's one of those grey areas that they can exploit. If you face this, know that you can push back. We're going to cover more of that in the tip section. Often what an insurer calls wear and tear might not have caused the issue until the disaster struck. Don't let them write off major damage as a pre-existing one without evidence. Number three, low estimates and tight scopes of work. Sometimes insurers don't outright deny a claim, and so they approve the claim, but they undervalue it. They might give you a repair quote that seems low or cover only part of the necessary work. After a disaster, insurers deploy assessors and builders to inspect your home. These assessors might genuinely be trying to help, but they work for the insurer, and they can be pressured to keep the cost down. It's not uncommon for the repairer scope to omit certain fixes or even use cheap materials or labor costs. For instance, they might say, we'll repair 2 walls and clean the mold, where in reality, the entire wall linings need to be replaced and the mold is in places you can't check. In North Queensland, Mel Deacon's case after Cyclone Debbie is a stark example. UWE's assessors disputed the extent of her damage. They patched her roof with tarp that failed, causing even more problems. Yet the company initially only paid out 60% of her insured amount, insisting that should be enough to cover repairs. It clearly didn't because her house remained a wreck. This is how insurers might lowball the cost to fix your house. As a homeowner, you might assume their figures are accurate, but if it's big damage, you want to get independent opinions. If your insurer says your rebuild will cost $100,000 and you suspect it's more, gather your own quotes from reputable builders. In a lot of cases, independent assessors come back higher, meaning the insurer's initial quote was indeed on the low side. Quick cash settlements that come up short. After a disaster, understandably you're stressed and possibly desperate to start repairs. Insurers know this and sometimes make fast cash payments to settle the claim. On the surface, that sounds great. Who wouldn't want the cash in hand? The catch is the amount might not nearly cover enough to fully repair or rebuild your home. The offer might be based on the insurer's discounted rates or a rushed assessment. If you take the money and sign it off, it's all on you to manage the rebuild and costs, which they often run over. Think about it, if you're in a disaster hit area, lots of tradies are going to be in short supply, there's going to be a lack of materials, it's going to cost more than what you expect. Consumer advocates warn people to be cautious with cash settlements for this reason. Elizabeth Mackney, a homeowner in Lismore who endured a 3-year battle after the 2022 floods, advised, don't be afraid to reject initial cash payment if you don't believe it will cover the cost of recovery. She says prepare for it not to be easy. And you often feel like you have to prove your case for a fair payout, almost like representing yourself in court. Her persistence paid off when an independent dispute resolution through AFCA ruled largely in her favor, but it took a long fight. The lesson here? The first offer from the insurer, especially if it's a cash payout, might be a lowball offer. You don't have to accept it if it won't make you whole. You can even ask for a detailed breakdown saying, I'm not comfortable settling for that amount right now. Remember, once you accept that final settlement, you usually can't go back for more if you discover extra damage or high costs. Number 5, the waiting game, delay tactics. Time is money and delaying payment is another way insurers effectively lowball claims. It's sad that after disasters, some people wait months or even years for claims to get resolved. Why would an insurer drag their feet? In fairness, sometimes it's just sheer volume. As Andrew Hall of the Insurance Council noted after the 2022 floods, the industry's resources were stretched by the unprecedented number of claims. But there have been cases where the delays were deliberate. The longer an insurer holds onto the money, the more interest they earn and the more chance that you might give up and settle for less. In the 2011 floods, the Courier Mail reported insurers banking significant interest daily on unpaid claims. And in the recent flood inquiries, AFCA pointed out that 37% of complaints they had received about the 2022 flood were about delays in claim handling. Some families are still in limbo after the disaster. As of early 2024, a parliamentary committee heard that a number of people had not had their 2022 flood claims resolved more than 2 years on. That's horrible. It's incredibly stressful for those stuck in insurance purgatory. From a homeowner's view, delays can feel like a tactic to make you give up. If you're paying rent because your house is unlivable or you're living in a caravan on the front lawn, you might be tempted to just accept the payout and just move on. Insurers are required by their code of practice to be timely, but the reality often falls short, especially when they're swamped. I've even heard anecdotally that some claims were shifted from different people and just went around in circles. All of this can be part of a war of attrition. Delay, and maybe the claimant will settle cheap and stop pursuing the full payment. Number 6, bias and inadequate assessments. After a disaster, technical reports carry a lot of weight. Insurers routinely hire engineers, hydrologists, builders, and other experts to inspect damage and write reports. In theory, that's just due diligence. They need to understand what caused the damage and how they can fix it. In practice though, there have been many complaints that these expert reports are one-sided or plainly inaccurate, slanting towards minimizing the insurer's liability. The 2022 flood inquiry highlighted this. Many claims were denied based on reports that made little sense to homeowners, including dubious hydrology reports and overzealous conclusions of pre-existing damage. Basically, homeowners felt the so-called independent experts were more interested in protecting the insurer's wallet than finding the truth. Now, not all experts are bad, plenty are honest, but keep in mind who's paying for them. If you get a report that doesn't match what you know about your home, you can challenge it. There's even been cases of engineers later found to have errors or multiple engineers giving different opinions on the same damage. One tip is that as the insured, you have the right to see the reports. Don't be afraid to ask for the full engineering report or assessment report your insurer has used. Scrutinize it or have your own expert do that, especially if it's been used to decline your part of the claim. Insurers shouldn't be manipulating evidence and regulators frown on that, but you want to verify because your payout depends on these conclusions. Nickel and diming on payout calculations. Lastly, even when a claim is approved and causation agreed, insurers might lowball in the calculation. This can happen through applying depreciation, sublimits, or other fine print cost limits. For example, most insurance policies in Australia cover your contents on a new for all basis. In other words, they replace items for brand new ones. But if your policy was actual cash value, they'd deduct depreciation, meaning that 5-year-old couch might only be valued at half its replacement cost. Or consider the sublimits. Your policy might say there's a $20,000 limit for outbuildings or $1,000 per item of certain things. After disaster, people often discover these limits the hard way, and it can feel like lowballing because the headline sum insured isn't what you actually get for everything. Another example, temporary accommodation charge. If your house is inhabitable, many policies will pay you rent somewhere for say 12 months, but what if the repairs take 18 months? Some insurers have inflexible cutting off rent coverage at 12 months, even if the delay wasn't your fault. Maybe there's a shortage of builders in your area. This isn't underpayment per se, it's honoring the contract to the letter. But from the homeowner's perspective, it feels like being hung out to dry. After large events, good insurers sometimes extend these benefits or make goodwill payments. Penny pinching insurers don't. Knowing your policy limits in advance can prevent these nasty surprises. And you might be able to negotiate with some insurers extensions around these. These can be the main ways insurers can lowball or shortchange claims. Not every insurer uses these, and many staff genuinely try to help claimants, but when push comes to shove, the company's financial interests often drive their approach. As a homeowner, if you're not experienced with insurance claims, it can feel pretty adversarial. A bit of a game where it feels like one side knows all the rules and you don't. In fact, one North Queensland resident described the post-cyclone claims process as traumatic, saying, "It's obviously sad that anyone has to go through that sort of trauma after a natural disaster to try and go fix what should have been a simple service they've already paid for." I mean, that quote really sums it up. You've paid for this service, the insurance, hoping it'd be simple, and instead you have to go into a battle. Lessons from the past. If there's a silver lining to the tough experience we've been talking about today, it's that each disaster has shown a spotlight on the flaws in insurance responses and really prompted calls for change. Let's look at a few key lessons and reforms from the past that give us a bit of hope coming forward. Standardizing coverage definitions. One big lesson from the 2011 Queensland floods was that confusing policy wording helps no one. Well, except for lawyers. After outrage of claims being denied because of the technical definition of the word flood, the government and industry took action. A standard definition of flood was introduced in 2012 for home insurance. Now flood is generally defined in all policies as covering of normal dry land by water that has escaped or been released from a normal confines of a lake, a river, etc. In plain speak, if a river or creek bursts its banks and inundates your home, it's a flood, and if you have flood cover, you're covered. This was meant to eliminate the semantic games I talked about before. Insurance Code of Practice, stronger promises. The Insurance Council has a voluntary code of practice which sets standards for things like responding to claims within a certain time frame, providing emergency funds, and handling complaints. After each disaster, the code often gets updated to patch problem areas. For example, after criticisms of how cash settlements were offered, the Code of Conduct requires insurers to clearly inform you of your options and advise you to seek independent advice before accepting cash payments. Ombudsman and complaint outcomes. A good lesson here is that fighting back can work. We have seen that half of home insurance claim denials were overturned on internal appeal. That means if you don't take no for an answer and escalate the issue, first through the insurer's own internal dispute resolution, then through AFCA, you stand a better chance of getting an outcome. AFCA's data from the 2022 floods shows that thousands of complaints were resolved, many in favour of the policy owners. Mel Deacon and Elizabeth Mackey's stories both ended with the insurers capitulating over a third-party review of the case through either the Ombudsman or AFCA. The lesson? Use the system. It's slow, yes, but it's there. The more people do, the more insurers might realise it's cheaper just to pay what they owe in the first place. Also, the mere fact that stories like Mel's has made it to the media and even the parliamentary hearing has an effect. Insurers care about their reputation. Cyclone Debbie taught Dewey the insurer a PR lesson when MP and ABC shone a light on their mishandling. Similarly, in recent flood inquiries, MPs have grilled insurance companies and said the evidence is very concerning. The industry doesn't want to be named and shamed like that. So one could say a lesson for them, improve or face the public wrath. How homeowners can protect themselves. After hearing all these horror stories, you might feel a bit anxious about your own insurance situation. The goal here isn't to scare you off home ownership or even make you paranoid. It's about empowering you. There are concrete steps you can take before and after a disaster to protect yourself and make sure you get what you're entitled to. Think of it as your own personal insurance game plan. Number one, know your policy before disaster strikes. This is the homework none of us like, but it's important. Read your product disclosure statement, PDS, or at least the key section on what's covered and what's not. Pay special attention to things like flood cover, storm surge, bushfire, and temporary accommodation benefits. If something confuses you, call your insurer or ask an insurance-savvy friend to translate. The time to understand your cover is now, not when you're standing ankle deep in water in your living room. If you discover, for example, that flood is not covered by your policy, maybe you opted out to save on the premium, seriously consider adding it if you're in a flood-prone area. Similarly, know your excess. That's how much you pay out of pocket on each claim. Some people have a high excess to keep premiums lower, which can bite you later. Number 2, insure for the right amount. Don't let underinsurance be you. When you insure your home, usually choose a sum insured amount. That's the maximum amount insurers will pay. Make sure this number realistically reflects the rebuild cost for your home, including the demolition of debris and meeting modern building standards. Like some areas have flame resistant materials if you're in a bushfire area, or even cyclone resistant rated construction. Building costs can rise quickly, especially after disasters when trades are in demand. Update your sum insured each year if needed. The reality is the cost to build now is at a whole-time high. It's way more than it was 5 years ago. So if you haven't checked this, look it out. There are online calculators too to help you work out what the building cost replacement is for your home. No one wants to pay higher premiums for a higher sum insured, but it's a lot less fun to be $100,000 short on rebuild costs. Some insurers offer total replacement cover. There's no set dollar cap. They just agree to rebuild whatever it costs. If you can afford these policies, they're great, but they usually cost more. Keep records and evidence. This is a bit of a life hack that pays off big if ever you have to claim. Document your home and belongings. Before anything happens, take photos and videos of each room, focusing on expensive items like renovations or unique features of the house. Keep receipts for big purchases like electronics, appliances, jewelry, that sort of thing. Note down model numbers. Store these records somewhere safe, probably on the cloud, because if a cyclone turns your house inside out, then any evidence owned in your house isn't going to be any help. Having before photos can also counter any insurer argument about previous damage. For example, after a storm, the adjuster says this crack in the wall was pre-existing. You can show them the photo from last month saying it had no crack there. After the disaster, document the damage thoroughly. Take photos of everything, every wall, every appliance, every piece of furniture before you claim. Like, it can be completely tedious in the moment, but you're going to thank yourself later if ever there's a dispute. You also want to make a list of all the damaged items. This will be needed for context claims anyway and will help nothing gets missed. Mitigate further damage, but don't throw things away without approval. Insurers expect you to act as a prudent owner and prevent additional damage where possible. This means after a storm, you should do things like tarping a broken roof or moving undamaged items to safe areas if you can. It not only saves your property from more harm, but it shows the insurer you're responsible. Interestingly, insurers have been known to deny parts of claims if the owner neglects to prevent avoidable damage post-event. However, coordinate with your insurer as much as possible. Most will tell you that it's okay to start cleaning up, but keep the damaged items, or at least photos of them, until they've been documented. For example, you might need to rip up soaked carpet to avoid mold. Do it, but snap pics first and keep a sample of the carpet. The Insurance Council of Australia advises not to dispose of items that might be repaired until the insurer has had a look. Also, don't do permanent repairs without the insurer's go-ahead. Emergency repairs are fine and usually covered, but if you fully fix something without letting the insurer know, they may not reimburse you appropriately. It's a bit of a balance. Protect your property, but also loop in the insurer early so they can't later say, oh, we didn't see that damage, we're not going to pay for it. Be proactive and push for information. The claims process can feel like waiting in a queue at times, but don't be afraid to follow up regularly. The squeaky wheel definitely gets the grease. If you haven't heard from your insurer and assessor in a while, call them and ask for an update. Take notes on who you speak to, the time you speak to them, and keep a claim diary. Record dates of calls, names of representatives, and a summary of every conversation. Elizabeth Mackney suggested that from her hard-earned experience, write down every conversation, date, time, all things discussed. This record keeping will be a lifesaver if things go wrong. If the insurer promises you something, we'll send you something out next week, and later backtracks, you'll have notes to refer to. If they've come and done physical inspections, ask for a copy of their assessment. You're entitled to know what they plan to repair or fix. Get independent quotes or assessments. If your quote is big, i.e. your house needs major repairs, consider getting an independent builder or loss assessor to give you a quote or report. Yes, this could cost you a little bit up front, but it can be a lifesaver if the insurer's assessment ends up lower. An independent report can challenge the insurer's version. For instance, if the insurer's engineer says only one side of the house is damaged and your hired engineer finds structural issues throughout, it could be a big discrepancy that could cost you a bunch. Don't rush to settle if it feels wrong. Insurers might be pressing you to accept a settlement quickly. They might say things like, this is our final offer. If you don't accept by X, it could take months to resolve. This could be intimidating, but take a breath and consider it. Remember, once you sign the settlement, you generally waive your right to ask for more. So you're gonna hold more leverage before you sign. If your offer doesn't cover your costs, it's okay to say, I'm not comfortable with settling in that amount. I believe the cost will be higher. Provide evidence, your quotes, example of neighbors' repair costs, anything relevant. Sometimes adjusters have a bit of wriggle room to increase their offer when pressed. Know your rights and avenues for help. If you hit a wall for your insurer, they deny your claim, offer way less than you needed, don't give up. You have the right to escalate a complaint. Every insurer has an internal dispute resolution department. You can lodge a formal complaint with them. Usually it's through an email or in writing. Then they set a timer. Usually it's 30 days to review and respond. Often this gets your case looked at by a more senior staff member or specialist team, which can resolve a lot of issues. If you're not satisfied with that process, you can go to AFCA, the Australian Financial Complaints Authority. It's free for consumers and it's an independent service that will help examine a dispute and try and find a resolution between you and the insurer. There are limits. They can only handle one claim up to a certain value, but on home insurance, it's usually up to $1 million. which covers most cases. AFCA's decision can compel the insurer to pay additional amounts or cover if they find things in your favor. It's not a court, it's meant to be user-friendly, you don't need a lawyer to lodge, but many people have successfully used AFCA after disasters, and as I noted, nearly 4,000 flood-related complaints went through AFCA for 2022 events. AFCA can also mitigate. Sometimes just the act of filing a complaint will spur the insurer to offer a better settlement to avoid a formal ruling. There's also legal aid and community resources that you can turn to if these don't work out. You also want to take care of yourself during the process. This might sound like a bit of fluff compared to the other bits, but it is crucial. The claims process can be a marathon, and you need to look after yourself and your own well-being. Leaning on friends and family for support, share the load, maybe with a partner or relative can help with the calls and paperwork if you feel overwhelmed. Don't hesitate to talk to a counselor or psychologist because some of these events can be traumatic. You can get PTSD. Suffering a cyclone or losing your house is genuinely traumatic. So look after yourself. Keeping a clear head can help steady your resolve and help you make better decisions and stand your ground when needed. I think remember that most insurance claims do get paid. We focus on a lot of the bad cases today, but it's not a guarantee that you're gonna have to fight every time you put in a claim. Don't be afraid to claim just because you assume a battle. Plenty of claims after Cyclone Alfred are gonna get handled super smoothly, but if you do encounter issues, you at least know what you can do now. As the saying goes, hope for the best, prepare for the worst. At the end of the day, your home is too important to take a backseat. By being proactive, informed, and persistent, you really greatly increase your chance of a fair outcome. Think of yourself and the insurer as a team with a common goal, getting you back on your feet, but don't hesitate to lead the team if the insurance lag. Natural disasters are not only a test of building infrastructure, but of the systems, and the insurance system is a critical one. We've seen how in the aftermath of events like Cyclone Alfred, the system sometimes falters, especially from us as homeowners where we expect support. Historically, some insurance companies have lowballed claims through slow handling, nitpicking, and outright underpayment. This isn't just corporate bean counting, which has had some pretty poor outcomes. The good news is you're now equipped with the knowledge, you know the common pitfalls, from tricky policy exclusions to the urge to accept a quick lowball offer, and you know how to respond. You've heard the cautionary tales that some people have made mistakes and then learnt their lessons. I tried to highlight some of the worst experiences, but the good news is it's driven lots of positive change in the industry and hopefully causing the insurers to do more of the right thing than the wrong thing now. And like I mentioned, you aren't powerless to fight this. There are avenues either through the internal dispute resolutions or through the ombudsman if you don't think you're getting the right outcome with your insurer. Ultimately, the goal of insurance is to restore you to a position that you're in before the disaster. That's what you're entitled to. Nothing more, nothing less. Don't feel guilty about asserting your rights. You're not asking for a handout, you're asking for what you'd pay your premiums for. Let's not forget why we bother with insurance at all, because when it works, it's a true lifesaver. Many communities hit by disaster have been able to rebuild only from the billions paid out from insurance to cover repairs and replacements. The system can work and often does, it's just you need to be careful if you get caught out. Thanks for sticking around, thanks for watching the video. Hopefully you got some insights there. At Hunter Galloway, the home for homeowners across Australia, obviously when you get a home loan, you have to get insurance through the bank. So yeah, I thought this was an important one to cover and an interesting one, not to say the least. So go do your homework, check out your policies. If you need any help with a home loan, hit us up at huntergalloway.com.au. Until next time, I'll see you later.